You think the economy is getting better, but the truth is you are actually getting poorer every single day because you are playing a game where the rules were written by people who want your lunch money. Look at the data right now and tell me if this feels normal to you. The cost of living is skyrocketing, interest rates are eating your soul, and while you are debating which fast food meal is still affordable, the greatest investors in history are quietly exiting the building. Before we dive into the bloodbath, I want you to do one thing for me right now. Stop what you are doing and comment your age and the exact amount you are currently investing every single month down in the comments below. Are you doing $50 a month or $5,000 a month? Be honest, because we are building a community of winners here, and transparency is the first step to escaping the rat race. If you do not have a plan, you are the plan for someone else to get rich. At some point, the stock market is going to crash. It might be caused by the bursting of the AI bubble, wiping trillions of dollars of value from some of the world's largest companies. Or it starts because the Iran war escalates further, sending oil prices to their highest point in years. Add in the fact that many countries are facing a cost of living crisis with rising prices, stagnant wages, and slow growth. And you have yourself a melting pot ready to pop at any moment. Now, I am fully invested in the stock market, and I have got hundreds of thousands of dollars at stake across all of my different investing accounts. If a crash was to happen, let me share with you exactly what I would do, how I would invest, and what I would be thinking. As I am making this video, there is plenty going on in the world that has people calling for the next stock market crash. Companies are spending hundreds of billions of dollars to build new data centers and buy chips from the likes of Nvidia and AMD in the battle to win the AI arms race. These huge expenditures of real cash today have a lot of people worried about whether they will see profits anytime soon. Recently, Meta announced that they are investing up to $145 billion on AI projects in the coming year, but there is no sign yet if this will actually make them any more money. Their shares have fallen this year by around 8%, and they are one of the worst performing stocks in the Magnificent Seven. On top of everything around AI, we have obviously still got the war in Iran going on, pushing oil prices into multi-year highs. Oil reserves around the world are approaching their lowest level in years, and there is no sign at the moment that this conflict comes to any simple resolution one day. It is over. And the next day, the Strait of Hormuz is closed again. These higher prices for oil are hitting some of the poorest people in the world and are causing inflation to remain higher for longer during a cost of living crisis. A market crash is something that almost every investor fears, whether you have been doing this for years or not even started yet. There seems to always be a voice from some corner of the room that any moment now a crash must be coming. Now, a stock market crash is generally defined as a decline in the market of more than 20%. Anything less than that, say around 10% or so, is typically called a pullback or a correction. Crashes are the most serious stock market event, and throughout history they have happened quite a few times. On average, you are looking at cutting stock prices by 35.8% from peak to trough, and typically they last about a year and a half. The recovery afterwards takes approximately 2 years and 2 months on average. Nobody wants to invest their hard-earned money and then just see it all disappear. It is at this point where most people end up going wrong. Picture this: everyone around us says the market is going to crash. They point to all of the data and say that a market crash is due any time. Now, our normal human response is to go into protection mode. If a crash starts and we see red days, we start to worry and think we better get out as soon as possible. We save what we have, take the profits, and hold on to our cash. We might even buy things like gold or bonds. All of that sounds perfectly normal and rational. Stock crashes are bad, so let us just avoid them and only invest when times are good. Oh, how I wish investing was just that easy. But this is not how the market works. In order for that plan to work, you would have to have some kind of amazing crystal ball. You would have to know a crash was about to come and sell out just before. Then you would need to know how long it was going to last. Then you would have to time your new purchase right at the bottom, which is typically when fear is at its highest point. There has been nobody in history who has ever done this on any kind of consistent basis. Sure, Michael Burry predicted the global financial crisis, but for every right call, there are literally thousands of wrong ones. Look at fund manager John Hussman. He predicted the dot-com bubble and the 2008 crash. He got billions of dollars in his fund. But then he kept betting against the market during the longest bull market in history. Over the last 10 years, his fund has returned a negative 2.7% a year. His investors lost money and paid high fees for supposed insights. There is nobody that can predict when a stock market crash can happen. You cannot predict the future moves regardless of how intelligent you are. So where does that leave us? Nobody knows what will happen, and that is part of investing. That is why investors receive returns in the first place. We put our money into shares with the hope they rise in value over the long term, with absolutely no guarantees. With no risk comes no reward. When we invest, we need to expect that prices are going to change every single day. I started a brand new stocks and shares account this month, even with everything going on. There will always be a reason to not start investing as a human. You want to protect what you have. Personally, I think the real damage from a stock market crash is not from the crash itself. It is from how we react to the event. If you put $1,000 into the S&P 500 in 1950 today, you would have over $15 million. The secret to winning is staying in the game when everyone else is running for the exit. How do you make sure to get through a stock market crash and come out thriving? Here is step 1. When I invest now, I am doing it with a plan. For me, it is all about financial freedom. You need to have some kind of plan. Otherwise, you are just doing something for no reason. When you do something without a plan, you can easily get knocked off course. Ask yourself how you would feel if your investments drop by 40% in a few weeks. It is never going to feel great, but you have to truly ask yourself if you can get through this. Step 2, invest like you mean it. Get yourself in the best possible position before you invest. Only invest money that you can afford to keep away for a long time. Make sure high interest debts are paid off. Make sure you have enough cash for emergencies. Everything has to be aligned, so you do not need to sell your investments if the worst happens. You cannot lose money if you do not sell. Only those who sell at the bottom lose money. I use low-cost index funds like VOO and VTI for the majority of my investing. All my money gets spread amongst the world. Biggest companies, I focus on getting more money in every month, no matter what. Step 3. Do nothing. And go back to step 1. I find it a strange thing to want to change the way you invest based on things outside of your control. If you changed your strategy because of every event in the world, you would have a new strategy every week. That is total and utter madness. Stop trying to time the market, ignore the noise, and focus on what you can control. The average person does poorly because they think too much. It is like quitting your job because you had one bad day. The first phase of investing from $0 to $100,000 is brutal. Everything depends on you. Your contributions do almost all the work. This phase requires the most discipline for the smallest visible reward. But once you hit $300,000, the math changes. At $300,000, a 10% return gives you $30,000. That is more than most people save in a year. The portfolio has officially taken over as the primary engine of wealth creation. Wealth is not just about what you earn, it is about what you keep. If you are driving a car that costs more than your annual investment, you are failing. Become a financial minimalist. Drive the 2006 Toyota Corolla until the wheels fall off. Put every extra cent into assets that pay you while you sleep. Move into a smaller place. Stop buying things you do not need to impress people you do not like. This is the DCA way. You buy when it is up, you buy when it is down, and you never stop. The system is designed to keep you broke. Break the cycle today by deciding you are a producer, not just a consumer. Stop watching the charts and start looking at your savings rate. We are entering a period of massive volatility, and most people are going to get crushed because they are following the herd. You need to be the one watching from the sidelines with a pile of cash ready to strike. If you start with $0 and invest $1,000 a month into a broad market index fund, returning 10% annually, in 30 years you have over $2.2 million. That is the power of time. But most of you will quit in year 3 because you wanted a new watch. Do not be that person. $40 trillion in debt is a ticking bomb, and the only shelter is productive assets. Oil will do what oil does. The Fed will do what the Fed does. Stay disciplined, stay focused, and stay invested. The future belongs to those who prepare for it today. If you found value in this breakdown, hit that like button and subscribe, because we navigate this storm together every week. No fluff. Just the raw data you need to survive. Hit that subscribe button. Peace.